Welcome, everyone. We will be getting started in just 1 minute. All right. Welcome, everyone. Welcome to the Just Us Coordinating Council Speaker Series. I am Reverend Dr. Zaria Davis, Senior Consultant with New Direction Coaching and Consulting. I'm also a proud 2019 Leading with Conviction alumni and member of the Just Us Coordinating Council. The JCC is the first national policy table created entirely by and for people who've been impacted by the criminal legal system. Over the last 2 years, we've built something powerful, a space where lived experience is treated as real expertise and everyone is welcome and has a seat at the table, whether you've been directly impacted or working alongside those who have. You are a part of this community. We're really grateful to have the opportunity to share space with each of you today as we discuss how limiting access to financial services and banking in particular create additional barriers to economic justice. Today, we're joined by three incredible experts who will share the past and current landscape of financial justice, state and federal policies in play, and efforts through policymaking landscapes to create change. Before we actually dive into this amazing panel today, which I'm super excited about, I just want to kind of talk a little bit with you all about the JCC. So I want to take a moment to orient you all to, for those who are just joining us for the first time, exactly why the JCC is truly first of its kind in its approach to policy and advocacy. So if we want to go to the first slide. Thank you. So in April of 2023, the Just Us Coordinating Council, also known as JCC, was launched, a national collective led by system-impacted leaders, community members, and national organizations who no longer demanded a seat at the table, but instead decided to build our own. There is a persistent relationship that we've noticed between poverty and inequity and mass incarceration. Shifting the status quo requires investing in the sustained leadership of people directly impacted by the criminal legal system and standing alongside them to propel change. You can shift to the next slide. Thank you. The voices of those most impacted by the criminal legal system have been missing or excluded from decision-making tables. Next slide. To adequately start addressing the harm caused by the criminal legal system, the JCC works to create pathways, access, and resources within these policy spaces. And these are just some of our priorities that we focus on. Next slide. Our mission for the JCC is to enhance the quality of life for justice-impacted individuals and their communities in order to restore human dignity. We do this by dismantling policies that uphold marginalization and are ineffective, which leads us to our session today around financial justice. This is an area that is near and dear to my heart, and I'm really grateful for our panelists who are joining us today to be a part of this. Formed in the wake of the 2008 economic crisis, Americans for Financial Reform is a nonpartisan nonprofit organization founded by more than 200 civil rights, labor, consumer, community-based, faith, business, and other organizations who came together to create an effective public interest voice for banking, finance, and financialization. Today, we are joined by Americans for Financial Reform's Director of Consumer Campaigns, Amanda Jackson. With over 15 years working in grassroots organizing, advocacy, and organizational development, Amanda has led numerous issue and electoral-based campaigns to amplify community voice in broader economic justice organizing, with a particular focus on debt, all things Wall Street, and bank reparations. We want to take a moment to welcome Amanda to the stage and allow her time to speak. Thank you, Amanda. Welcome.
Yes, thank you. Mike was muted. Okay, are we I don't see my slides. Excellent, excellent, excellent. Perfect. So a bit more about some of our work, my work in AFR in a second, but I want us to take a moment and look at the slide, look at some of the images on the screen, right? These images tell a story. They tell two stories, but also they are of the same coin. On one end, we see the impact of a monumental moment in our financial history around what it has meant for communities to have access and to live under an economic system that is rooted in the market. And on the other end, we see record breaking headlines of profit, right? We see banks such as JP Morgan that have yielded billions of dollars. But to our left, we see overdraft fees. And so the success of banks come at a cost. They deepen harm and they are drivers of over policing, incarceration, financial exclusion, and so much more. We can go to the next slide. So again, thank you, Zaria, for the intro. AFR was born out of the 2008 crisis and formed a coalition to do a lot of the work that we're going to talk about today. Big piece being finance, financialization, and what a sustainable economy or access to a sustainable economy looks like for those who've been formerly incarcerated and communities overall that tend to be excluded. And as noted, my focus areas are debt justice, Wall Street accountability, and adopting a frame of an economy of repair. We can go to the next slide. So, what is financial justice? It really and truly is pretty straightforward, right? It may come off as something rather elusive in our understanding, pretty far away or disconnected from our day to day reality. But it really just means that everyone has just and transparent, inclusive access to financial services, all of the tools we need to live under our current economic systems with the systemic barriers removed. We can go to the next slide. And so there are key elements of financial justice, right? Some of which you can see. I won't read all of these, but things like having a bank account. These are things that we should be able to have access to. Protection from predatory products and exploitative practices, right? Like these are all the things we should be shielded from. But these are the things that our communities have a hard time of accessing, again, for some of the structural reasons we will name today. We can go to the next slide. And so a bit more of key elements of what financial justice means. But the big piece is bold policy interventions to regulate harm and to pair that with an alternative of public options like postal banking, public banking access, access that isn't tied to institutions that are known for their harm. Let's go to the next slide. And so, what does this mean for the carceral system? How does this tie into carcerality? We know that the carceral system doesn't just take people's freedoms, right? It doesn't just incarcerate one's physical being, it also incarcerates one's ability to thrive financially. And it generates outputs that tend to harm those that have been formerly incarcerated and attempt to re enter the marketplace. One of the outputs we are aware of are debt by People who are re-entering tend to have fines and fees come out of the carceral system with a debt attached to their time having been there. There's the stigma, of course, of what it could mean to have a record and to navigate our society with one, the impact on family, how families tend to also pour into their loved ones who are re-entering. What does that mean for generational wealth or just wealth of any kind? Employment exclusion, because we know that there's the box, right? We're familiar with the efforts to remove the box. That is still a piece of that. And then unforeseen and likely undiagnosed mental health concerns on top of everything else. And so when people are re entering, they're not returning to their neighborhood, or at least just not solely. They are trying to re enter a space that never saw them in the first place. And financial justice paired with carsality takes that on. It very much so addresses the drivers that allows for there to be the level of carsality that we see within the financial system. We can go to the next slide. And so here we have a timeline that speaks a little bit as to how carsality within the financial system came about. So let's start at the beginning of 1863. We have the National Banking Act. So the National Banking Act was the start of the US banking system. It was tied to property, status, and social belonging. One had to have property in order to have access to an account. It really did set the stage for exclusion and also set the precedent for what structural barriers that folks will later impact or come across as a justice involved individual. In the 1930s, we see the rise of modern policing and redlining, right? Due to federal housing and banking policies that cut off the credit to whole communities. This allowed for police to expand in different areas in some of the same neighborhoods, right? Like serving as a space to find all kinds of reasons to ensure that people are in fact locked up. And then that created just cycles of disinvestment and criminalization under all things redlining and the increase of policing. In the 1960s, we saw the expansion of policing and uneven access to finance, right? This was around the time of the civil rights era and the civil rights movement, which pushed for the inclusion of people who've been shut out in so many different ways in our society, and to have access to the public resources that are stripped from our communities. But at the same time, IDs were a big part of that movement, right? Like you had to have an ID to vote. That's still a conversation we're seeing today, being able to be tracked in some shape, form, or fashion. Another way and a particular item that drove what it meant to have financial access. In the 1980s through 2000s, the deregulation crisis would come, right? Like we would see ongoing series of deregulation, mass incarceration. As a result, banks pulled back in certain communities, access was restricted in certain communities, predatory actors filled the void in certain communities, your payday lenders, your storefronts that offer loans, just exponential loans with different interest rates. And so that also added to the reentry crisis because it forced those who are reentering to deal with a space of instability. And then we have the 2008 financial crisis and reentry, and what that has meant in that particular case. We touched on this earlier, but the financial crisis wiped out wealth for everyone and restricted tools for financial access for everyone, compounded for those who've been formerly incarcerated. And so today we are on a path of doing a lot of financial justice and trying to define what that means. But to do so, again, we have to recognize that reentry is undermined by financial exclusion, and people are reentering a space that never saw them. We can go to the next slide. And so resources to learn a bit more, right? I absolutely would recommend Americans for Financial website. Our website has a lot of information on top of our partners that also do a lot of this work that would also be good resources. I want to lift up Hope Policy Institute. I believe they're in Mississippi or Alabama, but they do a lot of this work. They are also a financial institution. The Treasury put out a report, I think it was October of last year. And the report was their strategy for financial inclusion. And the CFPB, under Director Chopra, I believe, put out a report that spoke to justice involved individuals and what access meant in that particular case. Okay, we can go to the next slide. And yeah, that's mostly that. So I will pause there.
Thank you so much, Amanda, for sharing that information. That was very insightful. Some of our viewers may have heard terms like debanking and underbanking. Um, we've been hearing these terms in the news a lot lately. So could you just share what we as the JCC should be tracking around these particular issues?
Yeah, so debanking is not, I want to say not a real issue, but clearly it's a real narrative. Debanking is an excuse for political attacks on supervision and regulation, right? If we are serious in talking about access and what it means for folks to be banked, unbank and underbank is the conversation, right? What are institutions doing to push people out? And part of what debanking allows, at least narratively, is for that cycle to continue, is the removal of regulation. And so debanking is just a narrative. It's a red herring to keep us from talking about what access means for those who are unbanked and underbanked. And it's a way for institutions to circumvent how they can operate in a space that allows for there to be access for those communities.
Thank you so much for providing that clarification. And hopefully that is something that people can kind of sit with. And as we continue to have this conversation, just think about we as a council, what we want to do to move forward with that. So thank you for that, Amanda. Next, we have the honor of hearing from the Honorable Christopher L. Filburn, Assistant Attorney General in the New York State Office of the Attorney General's Bureau of Consumer Fraud and Protection. Assistant Attorney General Filburn serves as lead attorney in some of the Bureau's most complex cases, and his practice focuses on promoting financial justice and economic fairness in matters related to banking, consumer lending, and payments. He has seen firsthand through his litigation and policymaking experience how financial justice impacts individuals, families, and communities of all kinds. Chris, we want to thank you for joining us today, and we will pass it off to you.
Thank you. Good afternoon, everyone, or at least afternoon here in New York, where I'm located. My name is Chris Filburn. I actually recently moved positions into a senior enforcement counsel role. So technically my title is no longer Assistant Attorney General, but I forgot to update you guys that it just happened in the last couple of weeks. And today I just want to talk a little bit about the office, what it is, and what we do to promote economic justice in banking, finance, and consumer lending. So just to go to the next slide, just to quickly level set, what is the New York AG's office? It's an office that's led by the Attorney General currently here in New York. That's Letitia James, who is an elected official. In our state, the third highest ranking statewide elected official behind the governor and lieutenant governor. And that generally tends to be true in virtually every state across the country, that the attorney general is an elected official. And our office is effectively the lawyers for New York State itself. Most of the time, that means something that I'm not really going to talk about today, which is when the state gets sued. Any number of events might cause that to happen. A state hospital, misdiagnoses someone, a state vehicle is involved in an accident, and there's litigation. Our office handles that. But if we go to the next slide, one of the other things our office does is affirmative work, meaning affirmative investigations and in certain cases, bringing enforcement actions to enforce the law. And the work I do with the Bureau of Consumer Frauds and Protection is part of a broader division within the OAG called the Division of Economic Justice. And that division is made up of 5 different bureaus that are listed here. Very briefly, the Antitrust Bureau focuses on competition law, works hand in hand with federal authorities when there are mergers and acquisitions, both in banking and elsewhere, reviews the proposed combinations, proposed transactions, and tries to ensure that they're done in ways that promote competition as opposed to limit competition and thereby harm consumers. The Investor Protection Bureau is essentially our state level SEC. So investing in securities, retirement savings, any other sort of investment is going to be overseen by that bureau. The Taxpayer Protection Bureau does work to make sure that New York's taxpayer dollars are spent effectively. So work to combat waste and fraud, investigate companies that the state may contract with to ensure that they're complying with their obligations, that they're not wasting money that the state has allocated to them. The Bureau of Internet and Technology is one of our more recent bureaus, and as the name suggests, it focuses on all of those issues that are new to us in the past few decades, as with the rise of the internet and the digitization of so much of our lives. So when you think about things like data security, data privacy, your rights to your own data, what protections exist, that bureau looks into those issues. And then finally, the Bureau of Consumer Frauds and Protection, of which I am a member, has a fairly wide-ranging remit, but essentially looks at all activity in the state of New York affecting consumers. So that could be anything from buying a house or a car, opening a bank account, disputing transactions, making electronic payments, taking out credit or loans. Any and all of that activity falls within the remit of our bureau, and we look at it at a variety of different areas, including banking. So let's talk a little bit about how we fit into that picture. If we go to the next slide, just to give a quick overview, when you think about banking, and in particular, how the government oversees banking, both at the state and federal level, I think it's helpful to generally bucket the entities that exist and are out there into 2 groups. You have what we think of as the prudential regulators. These are the entities that license banks, that give them their charters, that essentially tell an institution you can or cannot be a bank. So that includes the Federal Reserve, that sets our interest rate and monetary policy for the country, the Office of the Comptroller of Currency, which oversees national banks, some of the biggest names that you've certainly heard of, the JP Morgans of the world, the Wells Fargos, the Federal Deposit Insurance Company. Most people think of this primarily as the entity that insures your bank account, so that any amount of money in your bank, if that bank fails, if there's a bank run, the government will step in and ensure that that money will be paid back to you. And then for non-national banks, for state banks, each state has its own banking regulator. Here in New York, it's called the Department of Financial Services, and they license and oversee state banks. And when you think about this group of regulators, the key thing to keep in mind is that their core mission is making sure that the banks are operating in a safe and sound manner as banks. What their job is not primarily focused on is individual consumers who are interacting with those banks. These entities are focused on, is the bank operating like a bank? Is it taking deposits? Is it safe? Is there going to be a bank run? They're really systemically focused on ensuring or attempting to avoid the next banking crisis. On the other side, you have your law enforcement entities. And by law enforcement, I don't purely mean criminal, although obviously the Department of Justice and the FBI deal in that space a lot, but entities that are charged with enforcing our laws, including consumer protection laws. So in addition to the DOJ and FBI, the federal level, you have the Consumer Financial Protection Bureau, which is an entity that was created in the wake of the financial crisis in 2008. And the Federal Trade Commission, which has been around for much, much longer, both of which are tasked with effectively trying to ensure that financial markets and consumer markets are transparent, are fair, and that the participants in those markets are playing by the rules. And then finally, you have state attorneys general, including our office. And we are doing a lot of the same work, but at the state level. And so our remit tends to be narrower. Here in New York, we focus primarily on New York consumers and on activity happening in the state, although in many cases, state AGs frequently work together to do what are called multi-state actions that can have more of a nationwide impact for key issues. So when you're thinking about who is there to help me as a consumer, as someone who is part of the reentry population, it's really these entities on the right that are the ones that are looking out for you, or should be looking out for you, we hope are looking out for you, and are there to assist in your challenges that you may face when interacting with the financial system and with the banking system. So if we go to the next slide, let's talk a little bit more about what our office does in particular to promote economic justice in these spaces. And then there are several things. I'll go to the next slide. One of the first things we do is we think about where are there gaps in existing laws and protections that can be enhanced and can be strengthened to protect individuals and to protect vulnerable populations. So this past year, we worked with the legislature and with the governor's office here in New York to be able to get enacted the FAIR Act, passed by our state legislature. This is a law that amends New York law so that prohibitions against fraud and deception are expanded. And now it's not just fraud and deception, it's unfair or abusive acts or practices are also prohibited in New York. Now, I've put a lot of detail on the slide here about what that actually means. These are the statutory definitions themselves. But what's really important to understand about those laws is that they provide our office and regulators who have access to these sorts of laws with flexibility. In today's economy and in our banking system, obviously outright falsehoods, fraud, it still happens, it still occurs, but it tends to be more the exception than the rule. And instead, what our office sees as a major problem and a major barrier to promoting economic and financial justice are more subtle but more pervasive acts that may not involve direct fraud, but that take advantage of vulnerable populations, that take advantage of a lack of knowledge or other systemic problems in ways that benefit the bad actors and harm the vulnerable populations. You think about dark patterns that are designed to play with consumers' cognitive biases and get you to do something or agree to something that you might not otherwise do through manipulation, through the way a message is communicated. Think about taking advantage of the fact that the average consumer doesn't read everything that's put in front of them when they're signing. You know, you go to buy it, if you go to lease a car, you're going to fill out dozens and dozens of forms, and very few people have the ability or capacity to sit there and review and understand what those forms mean, and taking advantage of that by slipping things in the process. So you can say after the fact, I told them, they knew about it. Designing systems that frustrate your ability to exercise your rights. We've all been there on a customer service line, trying to get through to someone, trying to find someone at a bank or a financial institution to help you or to answer a question or to deal with a dispute you have. And it's often like running into a brick wall. You can't get anywhere, you can't get answers. And again, no outright fraud or deception may be involved in that sort of activity, But the tools of unfairness and abusiveness give us the ability to look at systems like that and to ask questions. Are these systems designed equitably? Are they designed appropriately? Or are they unfair? Are they taking unreasonable advantage of others? These are incredibly important tools that we're really excited to be able to put to use in New York. Several states already have unfairness prohibitions. Very few have abusiveness prohibitions. And so this is a law we're really proud of. We're excited for it to take effect starting early next year. And we're hopeful that it's something that many states across the country will consider emulating and adopting. In addition to that law, if we go to the next slide, we often focus on more specific issues and narrower laws for new developments in marketplaces, new technologies to address. So I've listed a few examples here. In the last couple years, we worked with the governor's office to update regulations to allow for free phone calls, unlimited, in the New York incarceration system. We were a champion of a recently passed automatic renewal law, which requires, anytime you sign up for any sort of subscription service, financial service, recurring service where you're making a monthly payment and it's getting debited from your account automatically, or your credit card is being charged every month or every year, to provide you notice clearly and to give you a clear option and a simple option to cancel that service or that subscription, to get out from under something that you're paying for but may not see any value in anymore. And then just this past year, we worked with the legislature in support of the Algorithmic Pricing Disclosure Act. This is a law that attempts to address something we're seeing new in the marketplace, which is when you go to a website and you look at the price of an item, it may be that that price of the item is not the price of the item for everyone. It's the price of the item for you, based on data that's been gathered about you, based on your past financial behavior of others who might be similarly situated to you. And so we worked with the legislature to pass a law to ensure that when that's happening, the company that's doing it has to tell you what they're doing, has to make sure that you understand that you're being shown a price that, the person next door, if they go on the website, they may not be shown. So if we go to the next slide, in addition to thinking about filling gaps, obviously a huge part of our role is to enforce the laws that exist that are on the books already. New York has an array of important consumer protections in the areas of banking and finance that we are always on the lookout for violations of, and always there to enforce rigorously. So a few examples that are listed here are usury prohibitions in the state, which limit the cost that can be charged for credit to ensure that you're not being vulnerable populations aren't being pushed into loans or other financial products that are unaffordable, that are unreasonable, that are too costly. Our Exempt Income Protection Act is a law we're very proud of here in New York. This is a law that says that if you owe someone money, if there's a judgment against you, someone's coming at you, you're being harangued by debt collectors, there's a certain amount of money in your bank account that can't be touched, that cannot be taken, because as a state, we want to ensure that you have enough money in your account to pay the rent, to buy groceries, to subsist. And so, a few different recent investigations highlighted here identified some, both banks and other financial players, who were not abiding by those laws and not enforcing those limits, and were freezing individuals' accounts, particularly the accounts of individuals from vulnerable communities and communities of color. And we entered into agreements with those entities to reform their practices and ensure compliance with that law going forward. Another example at the bottom, we brought a case recently against a major rent-to-own provider. The whole idea of rent-to-own as a product is you're making monthly payments, working your way towards ultimately owning that piece of furniture or that car repair. But you should have the ability, if it becomes financially untenable for you to continue paying, to bring that product back and get out free and clear and not end up in debt and not be paying fees. And our investigation found that the company was prohibiting those sorts of practices and was limiting consumers' ability to take advantage of the protections that are built into our laws. So we brought an enforcement action on that. If we go to the next slide, in addition to enforcing our existing laws, one thing we spend a lot of time trying to think through here is what the future will look like and how do we address new technologies, new developments in consumer markets, new developments in banking that are constantly changing the way we think about banking, that are constantly changing the way individuals across the country interact with their banks and interact with the financial system and make payments. So, for example, one of the things that over the last 20 years has really been a revolution in this space is the digitization of banking. Now we all walk around with our cell phones in our pockets, which essentially is walking around with our bank in our pocket. We have the ability to make payments, receive payments, send money, set up transactions to recur. And that's created a tremendous amount of value for the everyday consumer, not having to go to a bank branch. People who work different hours and can't get to a branch when it's open need to be able to do their bill paying in the middle of the night. It creates a lot of value for people, but it also has created a lot of risks in terms of opening up individuals to fraud and scam that has become rampant over the last decade or so. People are convinced to send money or convinced to provide information that allows others to access your accounts. We've been very active in trying to push back in this space and trying to make financial institutions take responsibility for protecting your money, for ensuring the safety of your accounts. And I listed a couple of examples, our lawsuit against Citibank a couple of years ago that remains pending. And just last week, we brought an enforcement action against the company that operates Zelle, having found that in several years ago, they identified various security measures that would have but significantly limited fraud over the Zelle platform, but failed to adopt those measures. And then over the 4 years that followed, when they refused to adopt it, more than $1 billion was lost to consumers from fraud and scam. Another thing we think through is how technology is changing the markets and how those changes interact with the laws. So again, a few examples just quickly here that I've listed. The so-called earned wage access industry, which is a new technology-enabled payday loan system, is something we've been pushing back against. And of course, I think everyone these days is well aware of the introduction of crypto and cryptocurrency into our banking and financial systems and what impacts that might have. And that's something our office is thinking through every day and keeping an eye on as well. So if we go to the next slide, just briefly a little bit, how can you help us and how can you help promote economic justice in these spaces? Well, there are certain actions you can take. If you go to the next slide, I've listed a few examples here. The first is, please, we urge you, report your concerns, your complaints to your state attorney general. I cannot overstate how valuable consumer feedback is to the way our office operates. We review the complaints that come into our office every week. We look for trends. We try to identify repeat offenders, try to identify new emerging issues. And all of that is aided by input, both from community advocates and from individual consumers. So if you have individuals coming to you having challenges in the banking and lending spaces, urge them to go to the Attorney General and to file a formal complaint. Our office and virtually every AG's office these days makes a number of ways available. There's an online portal, there's a toll-free number. Report it to us. Urge your state legislatures to update their state laws for this century. The state level UDAP statutes that I talked about earlier are critically important and they're needed throughout the United States. And consumer protections need to be updated to address new technologies and the changing way that our financial markets are operating. And historically, it has been the states that have done that work. They've been at the vanguard of consumer protection over the course of American history. And I want to use this opportunity to really emphasize from our view, from our perspective, how important it is to resist this notion that everything needs to be uniform and standardized across the country. And this notion of adopting one federal standard that preempts state standards. I think that typically what ends up happening in those cases is it becomes a race to the lowest common denominator. And states that want to put in place enhanced protections for their consumers and for their citizens are restricted for their ability to do so. So at the state level, we should be urging our legislatures to update laws to address new issues as they emerge. And at the federal level, we should be urging our Congress people to resist pushes for rolling back federal protections, for preempting state laws for the sake of uniformity. Just because a technology company doesn't want to have to account for 50 different state laws doesn't mean they shouldn't have to. And we think it's really important to remind our legislatures at both levels how important these issues are. And then finally, I'll just share with you a few resources. I'm a little long here, so I'll do this quickly, but I'll call out our own website. There's a resources link on our website that directs to several helpful pages that talk about some of the issues here that we've been talking about, and that the vulnerable populations we're focused on are important too. That's car and auto lending, consumer issues, credit, debt and lending, investing in finance. There are different pages on all of those with helpful guides on some of the key legal frameworks for those issues. In addition to reporting to state attorneys general, federal regulators also maintain intake portals for complaints. We'd urge you, if you're going to take the time to report it to your state AG, report it to these portals as well. You can often just copy and paste the same thing, so hopefully it's not too burdensome. But in addition to looking at our own complaints, we frequently have access to and review these portals. They're important sources of information for both state and federal regulators to understand what's happening on the ground in consumer markets and be able to plan to take action. And then finally, when you are looking for resources on the law and on regulation around banking and lending, I just called out a few different national advocacy groups that maintain some really great resources that give good overviews about what is and isn't permitted under the law. Both the National Consumer Law Center and the Center for Responsible Lending are great resources on that front.
Thank you so much, Chris, for this amazing information as well as these resources. So just a quick follow-up. So some of our viewers have heard about the changes taking place in the Consumer Financial Protection Bureau. What steps should organizations and advocates be taking now to prepare our communities for how these changes might impact just the banking and our rights?
Yeah, it's a challenging time at the federal level for those of us who care about consumer protection, to be blunt. Just for those, if you're not closely following it, just earlier last week, the DC Circuit Court, so the Intermediate Appellate Court at the federal level, approved the administration's request to continue with its mass layoffs at the CFPB. We haven't heard that those are occurring yet, but given how close they got to doing it before the district court stopped them, I think it's quite likely that those could be happening in short order. And I think the reality is that that's going to force states to take on a much greater load in terms of protecting consumers, particularly in the spaces of banking and consumer finance. The CFPB really was, the entity in 2008 that was created and was viewed as the federal entity that was going to focus on consumer protection in these spaces. And so all of the laws and regulations that at the time, in the run-up to the financial crisis, existed in a number of different places, overseen by a number of different regulators, were sort of centralized into one regulator that would focus on these issues. And the thinking at the time, and I think it was right, was because before then, oversight was so diffuse across many agencies, no one agency really took primary responsibility for thinking about consumer protection. And it was always sort of a secondary issue for all those other agencies. Well, now the danger is we've taken all of that responsibility, we've housed it in a single agency, and now we're gutting that agency entirely. So the other agencies that might have had some responsibility in the past now have none, and you're gutting the federal agency that was supposed to be the primary source of responsibility. So into that wake, you're going to need enhanced supervision and oversight at the state level. I also think it's vitally important for those who have any ears on Capitol Hill to remind them of why the CFPB was put in place in the first place, the sort of systemic fraud and bad acts that occurred in the mortgage space in the run up to the financial crisis that no one regulator was responsible for. We're now getting rid of the regulator that is responsible for it at the same time that we're introducing all of these new risks into our financial system, whether it's through adoption of cryptocurrency by our major banks, or a number of other potentially systemic risks that are being introduced. So urge anyone that you have the ability to on Capitol Hill to resist these rollbacks and to remind them of the importance and the role of the CFPB.
Thank you so much. I appreciate you sharing that with our viewers. So we're going to go to our next and our final panelists. For 2 decades, the Hip Hop Caucus has leveraged the power of cultural expression to empower communities, often the first and worst impacted by injustice. The caucus's vision is centered around racial justice, healthy communities, and a healthy planet. As part of their Justice Paid in Full initiative, the Hip Hop Caucus has championed key economic opportunity initiatives, including Bank Black and Green. Central to this body of work is our next panelist, Stefan Coward, Economic Justice Campaign Director for the organization. He embodies the mission of the JCC by serving as a bridge between the community and essential resources, ensuring equitable access to tools and resources for informed decision-making. His work centers on creating clear, accessible content that advances economic justice and equity. Stefan, we want to thank you and welcome you into the space. We look forward to hearing from you, and I will pass it over to you.
Well, thank you. Thank you for having me, Dr. Davis, and my fellow panelists, Amanda and Chris, for the light that you brought on this important topic. As we're rounding out this conversation, I want to reframe the problem, spotlight some high leverage interventions, and talk about who can act. So together we can be able to build economic power for people that I call returning citizens that we know as formerly incarcerated people, because I feel as if a lot of this can feel overwhelming. And many of us can easily wonder, what can we do? And so now I want to go to this next slide and talk to you a little bit about, take about 90 seconds to reframe this problem. And before we dive into solutions, so that every action we take hits the root causes and not just the symptoms. Because I believe that as we're aligning our mindsets to ensure that whether we're acting alone or together, our efforts are laser focused on systemic change. And so there's 3 topics that I've brought up that I really wanted to dive into. It's like, we're talking about debt, building on what Amanda has shared earlier, like debt is surveillance. And when we're thinking about this, we're talking about who are the people who can act, who can be able to help inform us. And I just identified, this is not an exhaustive list, but like people that I want to identify are people like community educators, the advocates. These are the people who are translating complex monitoring fee structures into public awareness campaigns and training. And by mobilizing grassroots pressure, they can push state courts and supervisory bodies to cap or eliminate these electronic monitoring fees. And why does this matter? Because those $3 to $35 daily fees don't just track people, they punish them indefinitely. And they're creating a mounting debt that spikes recidivism rates and extends the carceral system far beyond prison walls. And so I wanted to be able to bring that up. The second one, we're talking about co-producing harms. These are people like check systems and predatory lending programs who can act in these spaces. Like, we're talking about people who are returning citizens, are formerly incarcerated leaders and researchers. Their lived experiences and research gives credibility to and gives them the authority to document how check systems, exclusions, and predatory small dollar lending works hand in hand. Like, they're able to gather the evidence, publish reports, testify to regulators about about how we can drive consumer reporting and lending reforms. And again, why does this matter? Because once flags, we feel like our returning citizens face opaque banks on how they do their operations, and they're forced into high cost lenders, trapping our communities in poverty and surveillance. And I really want to expand out a little bit more, talking about the scale of this crisis. Like, who are the people who can act? People like Chris, Amanda, and others, policy champions, funders, legislators, these regulatory agencies, and philanthropic supporters hold the budgetary and political levers needed to underwrite the studies that we need to do, redirect resources, and enact large-scale policies addressing the billions of dollars that families face in the burden when it comes to these issues. And again, why does this matter? Like, in the beginning, Amanda had mentioned that how families, the impact that it has on everybody, right? Like, we're talking about billions. And we're seeing that many of the marginalized communities may impact them 2.5 times more, right? And so that immense burden underscores the urgency for systemic change and not incremental fixes. And so by clearly defining who must act and why, we empower each other, we empower the stakeholders and individuals to pull the different financial levers of power in the pursuit of financial justice. And so next, I want to talk to you about, here are the high leverage interventions about who must act and how on this next slide. And so I see this section building upon what Chris was sharing with us. What I wanted to do is, like, because when I come to the conversation, I want to provide people with solutions and how we can act. What can we do? Mapping, like, what's possible for us, right? And so I see this building on what Chris has shared with us, and some of the interventions I think that all of us can take. We can work together on capping or eliminating electronic monitoring fees. These state legislators, these courts, these supervisory bodies must pass and enforce fee cap statuses, right? Secondly, I feel like we can transform the consumer reporting by banning arrest and conviction data from the check systems and credit scoring algorithms that require, like, we want to require a transparent appeal process. The CFPB, the FTC, the state regulators, like, these people who are working with consumer rights coalitions can help update regulations to protect our returning citizens. And as we see that many of these things are under attack right now. And so I want to just be able to highlight the importance of these bodies of people who are coming together to advance this work and why it's incredibly important, right? Like, third, like, we can expand on the public financial services, like postal banking, and embed trauma-informed financial navigators into reentry programs. Because what we need to talk about when we're having the conversation about financial justice, it needs to be trauma-informed, to be able to understand the impact that the system overall has had on communities, before we even start talking about the role that what we as people can be able to do to change it. We have to identify the harm that has been done. And so when we come to these conversations with that type of understanding, we are able to do more. And so I think that, whether we talk about, expanding consumer protections by putting caps on these predatory lending programs, because what we find is many of our communities live in areas that are considered banking deserts. These are communities that lack traditional financial service providers, and these predatory lenders come in there and are the only place where you can get your checks cashed, where you can get your other services met, and they come in there and they're charging predatory prices. And so we need to be able to create some type of consumer protection in that regard. And on the last part of this slide, I will share that there's people who are coming together, creating equitable banking standards, creating standards to where, like, if financial institutions, when they come into your community or any type of financial entity, that there are standards that they're operating by that matter to us. And if we're not using equitable banking standards, we can create community benefit agreements between us and the entities who operate in our communities. And you see a list of people who I believe that can be a part of that change. This last slide that I really want to go into is talking about, let's talk about financial levers of power. I want to leave you all with tools and resources that you can be able to do to map out what are these different financial levers that you can push and pull upon to be able to create change. And this is something that I'm really passionate about, exploring what they are and how you can be able to use them. So again, a lot of this work feels overwhelming, and I want you to be able to feel like you can be a part of the process, right? And so I've mapped out these different interventions, and we can focus on how everybody can be a part of it. One, we're talking about banking decisions and consumer spending. Individually, you're able to be able to shift your money to institutions, like Amanda mentioned earlier, to where you can be able to show that I want to be able to put my resources in places that respect my values and that support what I care about. And so you can individually move your money. You can collectively organize these justice campaigns with friends and colleagues. When we're talking about a couple other levers, political engagement and policy advocacy, right? There was the ability to be able to submit public comments, right? When we're talking about the rules and proposals that are coming out, signing petitions that seek to cap fees. Together, when you're doing this as an individual, together we can collectively power solutions that make our voice heard. We're talking about education, also another level of education and workplace activism. Like, we can host trauma-informed workshops and reentry centers, and to equip individuals with the critical knowledge to let them know that it's not them. The system was designed in this type of way, and so when you let people know that it's not just them, we can be able to make our voices heard. And so these are some of the levers that I wanted to be able to share with you. And in closing, just give you a little bit more of call to action on this final slide. And I want to be able to thank you for that time again. Like, when we're thinking about this conversation, financial justice requires that we all have a shared responsibility in this. We are all aligning individual power, because you have that, and then we can come together collectively. And then we get to be able to drive systemic change through our advocacy work, through the policy reforms. And most importantly, we make sure that our work is centering equity and community, that we are prioritizing the needs of the people who are first and worst impacted by injustice. And with that, those are some of the solutions that I wanted to be able to provide to round out this conversation. And thank you.
Thank you so much for this amazing presentation, and to all of you all. I am going to ask a question. I'm going to start with Stefan, and then if there are any other people that want to jump in. And I feel like this is kind of building off of something that Chris said, but in his question. But the federal government is currently in the process of deregulation by reducing agency funding, staffing levels, and equity-focused guidance. What will this mean for the banking industry and issues for consumers that we discussed today? So I'll start with Stefan, and then if any of the other panelists would like to jump in, I want to open that up to you all as well.
I can simply say less protection, less consumer protection. Right now, the industry does believe that regulation stifles innovation. I'm here to tell you that there's importance to have regulation that is protecting people, because without it, we see what happened in 2007 and 2008 with the financial crisis. We see how people can overstep their boundaries and prioritize profit over people. And so it's important that we have smart regulation to be able to help put guide rails on, so we can create an inclusive, just economy that works for everybody.
Thank you. Would anyone else like to jump in? All right. Thank you for addressing that. I just want to make a note for those who are joining us that slides will be distributed post-event, inclusive of all the resource links also shared. So we're coming to a close for today. And I just want to say thank you to our incredible guests. This was very educational for me, and I will be definitely following up with each of you all on some different things that I heard today. So I hope that others will tap into the resources that you all shared. I'm confident that what you all shared today will lead to a deeper understanding of the many resources that can contribute to financial justice. Before we adjourn, I just want to offer a quick reminder for our audience. We ask our viewers to please use this QR code on the slide here that you all see to complete our survey and let us know your feedback from today. As always, if you haven't done so, join us and follow us on our social media, and remember to share the opportunity to join the JCC with your circle as well. Finally, for those who are enrolled in the JCC, we want to hear from you about the coming months of your advocacy. Earlier this month, we sent out an advocacy and capacity survey so we could continue to learn more about the members and how we can create collective impact and policy. Another link to complete the survey will go out with today's recap email, and we are really encouraging you all to take just the 5 minutes to complete that as well. Again, we want to just thank everyone for joining us today. These amazing panelists for what they brought to the table. And as always, stay tuned to our social media as well as the listserv with upcoming announcements and how you can engage with the table. Thank you for joining us today, and have a great week.